Hello everybody, this is Jose Blasco. We are about to get started in around 30 seconds. This is a sound check. Please go ahead and confirm with a quick message on the chat box that you hear my voice. That would be greatly appreciated, so I know we are ready to go. Thank you so much, guys. Almost there. We just got a few seconds to go. Here we go. We just reached the top of the hour. Thank you very much, Mark. How are you? Good morning. Good morning, everyone. We are now ready to get started. I am maximizing the introduction slide so we can have a proper introduction for the session and get started as well. Hello, everyone. Good to see you. Today is December 5, 2019. My name is Jose Blasco. I will be your guide. And today I am guiding you into the world of longer term trading. So we'll be looking at options, we'll be looking at opportunities, both directional and non-directional, looking at the setups, looking at the trades, planning all the parameters, and confirming if those trades seem to be proper for execution. Before we get started, as always, I need to read a disclaimer for you, and here we go. The following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. And this takes care of the introduction and allow us to close the introduction slide and now be ready to focus on our trading platform. TradeStation is up. We got our scanners on the left side of TradeStation, where we've been running directional scans as well as non-directional below. Okay, pure non-directional here in the middle, and the ones that are below are still credit opportunities, but they are neutral long, neutral short, where the ones on the top, they are debit opportunities and they are pure directional trades to the long side above and to the short side below. Okay, so we're going to be using those scans, looking at those opportunities and putting the trades in place. Okay, Bojan, I can see you are with us as well. Very, very nice to see you. And let's begin. Okay, so I'm going to click on non-directional trades. Okay, we have a list of stocks here that are candidates for non-directional opportunities. Of course, all those stocks based on what the scanner has done for us. We know all those stocks got a pretty high level of premiums, and this may be because earnings are close by. And if that was to be the case, we need to identify that, because that would be the source of risk that we don't need. So I am bringing in Yahoo Finance. Okay, notice the URL, finance.yahoo.com/calendar/earnings. This will allow us in the search box to input the symbols for the stocks that we want to check, and will be returned with what are their earning dates. Meaning that if we find stocks in the list where the earning date is far enough, then we are now dealing with stocks with high premium and no earnings risk. And that would be the initial part of our filtering in order to find opportunities that are low risk but pay well. Okay, that's the plan. Also, when looking at all those stocks, the first thought in the back of my mind, as always, if you've been in the sessions for a while, you know that I start always with stocks of a higher price value, because when selling options, you collect premium, and the more the price of the stock, the more the premium. There are many more factors that impact the prices of options, but certainly the price of the stock is an important one. So I will start with stocks such as DHR, FedEx. I will skip LQD because it's an ETF. I'll look at Procter & Gamble. I will look at UPS, because those stocks are above $100 and per share. And from there, we'll look at the other stocks and maybe valid candidates too. But initially, you would think not as good, because the price of the stock is also lower. So you are likely going to collect less premium. Okay. So I'll start with UPS. I am loading UPS, and of course, I need to wait for the PD to go away, meaning all the data has been downloaded. PD stands for pending data, meaning data is being downloaded behind the scenes. Okay, here we go, we have it. And when looking at pre and post market data, we get a probability of 44%, which is not enough. So we're gonna change that from pre and post market data, we're gonna change it to regular session. And when doing that, we get 48%, which is very, very tight. It's not amazing, but it's enough for non-directional trades. If we were dealing with purely directional trades, just as a side note, we would want that value to be at least 50%. We would not be flexible with it. But being this a non-directional trade, we are going to be okay as long as we are above 48%. Okay, good. So let's begin. What do we do when we get to this point and we are doing a non-directional trade? Well, what we do is that we load Option Station Pro, and without thinking about it at all, we are just gonna input an iron condor on UPS. So Option Station Pro, which is being loaded as we speak, Option Station Pro will be able to do a projection based on probabilities and give us information when it comes to what a statistical range would be. The moment we know what a statistical range would be, we would then go ahead and find beautiful UFOs that are above and below that range, and these would set the extremes for the range that we want to capture, and we would be planning an iron condor on UPS if all of the above is correct. Okay, but again, the one thing I didn't do is to look at earnings, so I'm going to do it now while this is loading. So UPS, hit enter, and the next date for earnings on UPS, as you can see, is January 29, which, you know, it's plenty of time from now on, so that looks good. The fact that we have good premium but earnings are not at all close by, we still got like a month and a half, a little less than that, but kind of like a month and a half to get to earnings, so that is actually quite nice. Okay, so I'm going to load UPS. I will load UPS. Here we go. I'll look at December 13, which is the next Friday expiration. And as you heard me say a million times, without even thinking about it, I'm going to right click anywhere to analyze and sell an iron condor. And the moment I do that, the trade will show up on my analysis tab. I do have another one from the another time, so I'm just deleting that. So I am left with one iron condor looking at December 13. I got one standard deviation plus, one standard deviation minus. And what this is telling me is that from today until December 13, the statistical range is somewhere around 113 to a little bit less than 121. So 113 and 121, this is the information in my mind right now. And what I'm going to do with that information is go ahead, draw a line to where 113 is, which is somewhere here. Okay, and also draw a line where 121 is, which is more or less here. Okay, and knowing that information, well, it's pretty clear. We got a UFO right there lining up with 121. That's nice, but unfortunately the green UFOs we have, they happen to be within the statistical range. We want the UFOs to be beyond the statistical range. That, you know, this is the location where we'd like to find those UFOs. Okay, so I'm gonna have to shrink the chart a little more to see where are the other UFOs. And yeah, unfortunately, you know, the next UFOs are found all the way 104.8, 104, and that will make that range to be humongous, and we are likely going to waste our time if we plan this trade, because the further away the UFOs are, the more out of the money the option will be, and the more out of the money the option will be, the less you get paid, and therefore again, you know, it's not looking good. In any case, just watch it, because if that stock was to go back up somewhere here in the middle, next thing you know, you could use that UFO, and you can use that UFO, and you would be in the middle of the statistical range. So this may happen later today, maybe tomorrow. So certainly UPS may become a good candidate anytime, but just not right now. Okay, so we're gonna go for the next one. How are you, Pansy? Good to see you. We're gonna go for the next one, and the next one in the list would be Procter & Gamble. So while the chart is loading, I'm just gonna go ahead and check earnings, PG. And we can see that earnings on PG are happening on January 21st, okay? Similar to UPS, in the sense that we got plenty of time in front of us before that happens, okay? Which is, again, nice, okay? That's very, very nice. So now, let's take a look at what we have. First, it's not a very good news. We got 47.5, so we're gonna have to change this to pre and post market, see if we at least we get 48. Okay, ideally 50, but again, because it's non-directional, we can take a little more. Yes, so we do have 50% if we use pre and post market. Okay, but the question is, do we have red UFOs above? Okay, and to understand that, I'm gonna have to look at the monthly time frame of Procter & Gamble, because it's looking like that stock has been traveling a lot to the upside. Notice how that stock is basically making all-time high in the monthly time frame. In other words, there is no high data higher than the current price. And when we load the chart, you can see there are green UFOs, but there is no red. And because there is no data overhead, well, then there is no red UFO. So in other words, we cannot plan a pure non-directional trade on a stock that only got green UFOs or red UFOs. We need both the green and the red. Okay, so in that sense, we're gonna have to go for the next one, and it's not gonna be LQD, because you can see if I put my mouse on top, you see iShares, okay, and it's an ETF, right? And again, nothing wrong with using an ETF, but you get paid less premium. So therefore, I'm gonna move straight into FedEx and see if FedEx is giving us a proper setup from all the angles. Again, job of a trader, I'm sure you heard me say that many times. The job of a trader is to say no more often than yes. So we need to be picky and selective, and every time we are looking for a market opportunity, we need to make sure everything is on our side. So December 18, that's the earnings date for FedEx, okay? And I want to look carefully. Certainly, we do have a possibility here, I guess. But notice that December 18 happens to be in the middle of 2 weeks from now. So we cannot use December 20 expiration, which is Friday. Therefore, we need to use December 13, which is the one we prefer to use. But my point is that that's the only one we could use. We cannot use December 20, because then earnings may happen before that date, and that would be problematic. So when looking at FedEx using pre and post market, we got 44%. When looking at FedEx from a regular session point of view, we have 48%, which is right there, the very, very limit, but it's okay. So we can go ahead and do step 2, which is load FedEx on the option chain. And as I said before, and as I always say, without even thinking about it, or overthinking about where the UFOs or where they're not, we're gonna go ahead and pick December 13 and right click to analyze and sell an iron condor. So TradeStation will be the one telling us more about the statistical range that could be in this case. Okay, so we want to use plus 1 standard deviation above. We use the last price in the middle, and minus 1 standard deviation below, just because it goes from top to bottom. So again, very careful with the date. Make sure you have the right one. When looking at December 13, it's looking clearly like we're looking at a range between 148 to 162. So 148 to 162. Let's go ahead and look at that on the chart so we get to understand better where that is. Okay, so 162 is there. Okay, 148 is somewhere here. Okay, so the statistical range suggests that we will need to use that upper UFO. Okay, and purely based on stats, you will be using that one, the green UFO here. But remember, one of the rules we have when we do non-directional trades is to always use at least 2 UFOs, not only one. And therefore, we're going to have to move to this location so we have at least 2 UFOs to defend ourselves. So basically, we are talking about the 166 point something and the 141. And of course, the question, we always start with a call, because the calls normally have less premium built in, right? The question is, are we going to get paid enough? Okay, and the answer, unfortunately, is no, because the 167 only pays 6 cents. Okay, so there is not that much premium built in. Yeah, very conservative amount of premium, 29% for that expiration date. Huge amount of premium on the next one because of earnings, but really very, very big difference. Okay, if you look 48, 43, it's a smaller difference, but 48 to 29 is a very little difference. So you know what? I will not give up on FedEx. It's not looking good, to be honest, and probably we will not be able to set up a trade today. But just in case, okay, we may see some increase in premium given the fact that I see a very large difference between those two values, you can see that one is much larger and that one too. So, I'm not sure why 29 is so low. I know why earnings are not priced in, but at the same time, the difference is a little greater than what I would expect. So I'll come back after the market opens and all the data in the option chain re-updates and we have everything again back under control and real time. I will recheck FedEx to see if we do have an opportunity or not. Okay, cool. So let's continue. Okay, we still got 5 minutes before options change will reset. So let's continue. Okay, going up, we got DHR. Okay, DHR. So again, looking at earnings. DHR. And earnings for DHR seems to be January 27. So from that point of view, it's fine. We don't seem to have any conflict with earnings exploding, in the middle of the trade. That's not looking like that. Now the stock is in a very intense uptrend as we speak. So I wanted to look at where we are at, and in the monthly time frame, notice how that stock is making all-time high. So same problem we had earlier. I think it was with Procter and Gamble, isn't it? Where we had no red UFO. Okay, and in this case we cannot do a non-directional trade. Maybe we can look at it from a neutral long point of view. Maybe if we have time later and it happens to be identified by the scan as well, then maybe we can take a look at that. But as we see it right now, it will not be the case. Okay, Orlando, how are you? Very nice. Lady is better than never, isn't it? That's what they say. Anyway, so look, let's continue. Okay, so what do we have? We've looked at all the stocks which are over $100. So another stock I would like to check is $72 here. We got Nike 93, and then we will drop to the 50s. Okay, so let's look at Nike and EOG first. Okay, click on Nike, then move to check earning dates for Nike and NKE. And as Nike is loading, we can see earnings happen on the 20. So same story. It's okay for us to execute a trade with Nike, a non-directional trade, but we need to be using December 13. We cannot be using the next one. Okay. Okay. Yeah, and I can see here that we planned a trade the other day on that stock, and that one was directional. Okay, got it. Okay, so I'll delete that because that's a different story. Now we are being non-directional. Okay, change of market conditions for Nike. Actually, 1 million of green UFOs showing up here. Lots of intense buying coming into that stock. 50%. 5098 with regular session pre-post market provides what? 58%, which is much better. So certainly we welcome 58%. Interesting to see that we got a 2% gap today. And I want to check on the monthly time frame to see where we're at with Nike. Yeah, and that's what I thought. We are, again, close to making all-time high. So very similar situation to what we had with Procter and Gamble, as well as FedEx. Okay, so we cannot do any sort of non-directional trade in this case, since we don't have red UFOs overhead. Okay, and we need at least 2 for a non-directional trade. Okay, so no Nike and EOG. So let's see what EOG will bring for us. Looking at earning dates as well. Okay, so EOG. So we are talking about February 24. Okay, the last earnings took place on November 6th. So the next one will be February 24. So that's great because there is a lot of time from now until then. 42%, that is not great. So let's see what happens when we switch to regular session. And now we can see it becomes 46, which is not good enough. And that again happens very, very often with stocks that are related to commodities, such as oil, natural gas, etc. Even if you look at the ETFs such as USO, which is the ETF that represents commodities, okay, you will see that the performance stats, I mean, let's let it load, but the performance stats are going to be normally quite low. Same if you were to look at gold, for example. And the reason for that is because those markets trade close to 24 hours in the futures, in the future exchanges. And therefore, what is represented in the form of an ETF is really a partial picture that represents only half of the story, or less than half of the story. So it's very common to have, pretty low stats for commodities, commodity ETFs, and also stock related to commodities. Okay, it's certainly much intelligent to look at futures when you want to understand those markets compared to using any sort of equity. Okay, so that always makes it more complicated to be able to expose yourself properly to stocks that are related to those commodities. Okay. Anyway, what else do we have there? So, well, actually, I'm gonna stop here when it comes to non-directional, okay, because we just hit 9:20. So 10 minutes before the market opens, okay, if you look at the option chain, if I load anything, for example, SPY, just to pick one, you will see how everything now has been zeroed out, everything has been reset on the option chain, and therefore we cannot do much. So what we're gonna do then is, instead of looking at more, let me expand so you can see. You see everything is zero, okay? And this happens 10 minutes before the open, okay? So that's why during the next 10 minutes, what I'm gonna do is I'm gonna change subject, and instead of looking at the pure non-directional opportunities, where up to this point, everything we check here was unsuccessful, so what I'm gonna do is first rerun the scan for non-directional. So this is now updating in case some new opportunity showed up. And after the market opens and everything re-updates on the option chain, then I will go back there and see if there is some opportunity. And in the meantime, what I'll do is work on the directional trades, where I have more work to do on the charts, because to do directional opportunities, I need to look at my climate, I need to look at the UFOs, I need to look at the targets, I need to look at more things. So I'll spend those 10 minutes identifying opportunities, if any, and then when the market opens, then I will complete everything I started in the non-directional arena as well as the directional arena, where I am starting right now. Okay, so let's begin from top to bottom. There are only 9, so normally I would start with target first, or NTES, because it's higher price point, but really it's only 9. So I'm just gonna go from top to bottom because it's not that many. So what I'm going to do as I'm loading those symbols, what I'm really interested in checking first is the climate. That's the first thing here in this chart, okay? So the climate is going to be loading here in the bottom, okay? And that's it, DHI, we can discard this one immediately because we got 16 candles into this climate, where that climate was supposed to last by 5. In other words, the move here, it's very, very, very extended. Could it keep going? Yes. Is it likely? No. Based on probabilities, okay? And I'm not the one saying that, it's just pure stats applied, pure math, if you wish, applied thanks to TradeStation. So because the stock market is made of many, many stocks, I don't need to force it. And therefore, I'm just gonna move into the next symbol to see if I am provided with a better opportunity, where probabilities seem to be on my side instead of against me, and then plan that other trade instead of forcing the first trade, which does not look adequate enough. Okay, well, so what do we have here? Okay, well, notice that you may be surprised because you see a red dot, and you may be like, how can that be? I have a red dot, given the fact that Jose is pointing at the long opportunities. Well, and the reason why is because given the movements that took place in that stock, around the current time, what happened in the last day actually changed the climate to an up climate. Now, we don't see it yet because the market has not opened yet, so we still see red. But when the market opens later today, in 8 minutes, you will see a blue dot show up right there. Okay, it's not there yet, but the scanner is helping us to know that that's going to happen the moment the market opens. Okay, so therefore, I am open to look at market opportunities with GILD. And in order to do so, I'm going to continue planning the trade, where I just look at my probabilities, which is 50.40. If I was to switch to pre and post market, that would move from 50 to 48. 48 is not acceptable. So the only way for me to take this trade would be to use my regular session, okay? And in that case now, I will be looking at green UFOs located around 63.31, okay? 63.31 and 66.31. And that is here where, unfortunately, I need a UFO to be somewhere here, but my UFOs happen to be much lower, okay? In other words, I don't have a valid setup that allows me to take an entry on a GILD, and therefore I'm just gonna go for the next one, which is MDCO. So clicking on MDCO, and let's see what's gonna happen. Again, we are waiting to have our daily chart to update so we can check the climate, because of course that's the first step. Well, certainly I already see something that probably will make this trade to not to be valid, because notice the huge massive gap. Okay, we don't see that often, isn't it? Look at the gap, amazing, going from 68 to 84. And yeah, I mean, we have so many things that are wrong here. First, the climate is overextended, okay, and second, 79 is the price we want, and certainly 79 happens to be in the middle of the gap. So we have no trade on MDCO, so we now move to NetEase. Okay, so I'm just gonna wait for NetEase. Okay, the daily time frame is loading. And we have a climate of 8 candles out of what would be 5, okay? So we always allow ourselves a little bit of breathing room, isn't it? So we take 4.21, run it up to 5, and then we take half of 5, add it to 5, and that's 7.5, okay? And what happens? Well, 8 already surpasses 7.5. So again, too extended as a move, that's the problem. And it could keep going, but typically what would happen is more something like that. After it has extended greatly, then you will have some sort of a correction, okay? And then when the climate redefines, that would be the right time to re-enter, to be, you know, in a proper position with higher odds in our favor. But we don't have that possibility because the climate is already extended. So waiting is what we need to do. So I'm going for the next one. And guys, I'm just noticing, could you please confirm that the sound and the picture both is correct? Is my screen updating properly and everything is fine? Yeah, I think so. Yeah, I don't know why. For a minute, I thought it was not good. Hey Dirk, good to see you. Very good. So what do we have here with that particular stock, NTNX? So we got a climate with 5 candles out of 6, okay? So it's a little late, okay? It's a little late. It's not like the perfect trade, but it's not late, okay? It's just a little late, okay? It's still okay time for us to get into the trade, because remember, we take this number, 642, we run it up, okay? So we will make this to be a 7, okay? So that would be the expectation for the move, okay? But then we give ourselves a little bit of extra breathing room by taking half of that, which is 3.5. So we would expect a move here to be around 10, okay? And out of a 10 candle move, when the market opens, is going to be candle number 6. So we can still plan on a trade and being there for a few more days, which certainly sounds like a good idea, okay? So we're gonna go ahead and look into this, okay? We got 47%. That is not good. If we change to pre and post market, 47 becomes 49, and it's almost 50, but it's not. So we're not gonna improvise here. We're just gonna be mechanical and go for the next stock, okay? And we'll give that particular stock a no. We are 2 minutes away from the opening hours, okay? SE, so C Limited. Again, same situation as before. We can see red, but when the market opens, it's going to be a blue dot. Okay, the scanner knows that already, and we have an average of around 36.87. Okay, so we're going to have to wait here for a second for the pending data to be finished and see if we have a UFO around 36.87. Okay, so we got 52% with regular session. If we change to pre-post market, 52 becomes 39. That is not good, so we're gonna have to use regular session. And the top of that UFO happens to be 36.43, which is like 40 cents lower than what we need. Okay, and therefore we don't have the right setup either, so we move to target. Okay, we move to target, and we'll see if that's gonna be okay. And what's going on with target? Well, we have a very extended move here, 13 candles into the climate out of 6. It's too late. Okay, so we're gonna go for UAA. Market just opened, by the way. So remember, when the market opens, when I'm done with this list, the first thing I'll do is go back and revisit FedEx. Okay, remember we said that. So I'll go back and revisit FedEx, and then I'll continue with the whole process. Okay, so UAA Under Armour is being loaded. So we're just gonna wait a little bit until the daily time frame is here. Here we go. So we have it. Okay, yeah, certainly looking good. So we have one candle out of what would or should be, based on probability, 6 candles. So certainly we are at the beginning of a move that could just go ahead and produce itself. So we are looking for it. Okay, so the average is currently around 18.31. Okay, 18.31. 18.31, well, it's perfect. Okay, we have a UFO right there. So in this case, we do have a setup. Okay, but again, I cannot be too excited yet, because I still got pending data, and I need that pending data to load so I can see my probabilities. I need my probabilities to be over 50. Okay, and look at a little bit of a teasing here coming in, right? 49.59. Again, we're not gonna break the rules. Okay, so let's check pre and post market, and hopefully the way institutions, and yes, okay, yes, we have it right. So the way the large market players are dealing with that stock, as you can see, you know, they are doing their most intense trading, or the orders that they care the most about, the ones that they don't cancel, are actually placed in pre and post market, not during market hours. Okay, so we can see that thanks to the stats is kind of looking behind the scenes. Okay, and we do have a UFO located at 1833, which coincides nicely with the average. So we do have a setup. Okay, so hey, let's go ahead and complete our trade with UAA. Okay, so we have the climate, and therefore the next step in our method would be to go ahead and activate AutoUFOs to look for a target. So we will look for a target, and the target would be located around 23. That would be 22.84. Okay, so that would be the target for this trade. Okay, this is a pretty low price stock, which is nice if you are in learning stages with options. It's nice in the sense that you're going to be able to take one contract or two, and it's going to be a very low cost trade. But if you really want to make money with this one, you're going to have to load yourself with contracts, because again, it's a low price stock, right? And therefore you're going to have to increase the size. But we're going to see all the parameters in just a minute. Okay, so what do we have? Okay, well, what we have is that we concluded that let me shrink this just a little bit, just to be a little more realistic with prices. We concluded that our target, okay, our target is going to be located at 22.84. That's our target. Okay, our entry, okay, the entry price entry is going to be located at 18.33. Okay, that's the entry. Okay, and in order for us to be able to do this trade, what we're going to do is we will sell. Okay, we'll sell a call above target. Okay, so this call needs to be above target, and then we will buy a call between entry and target. Okay, somewhere in the middle. Okay, but of course we need to be a little more precise, which I will in just a sec. Okay, also something else that we need to define is what's the expiration date we're going to use. And the expiration date that we're going to use depends on the time to target. Okay, so how do we calculate the time to target? Well, we're going to grab a calculator. Okay, so here's the calculator. We're going to look at 2284, and we're going to look at the entry price, which is 18.33. So we are looking at how much is the move that we're going to collect if we're right on this trade. That's $4.51. And what we're going to do is that we're going to go ahead and activate the average true range on the daily time frame, which is 54 cents, right? So we can go ahead now and take that value, that was $4.51, divided by 0.5443, okay? And this is telling us 8, okay? It's gonna take 8 daily ATRs to get to the target, and we are giving ourselves 1 week per daily ATR. Therefore, we are talking about 58 days to get to that target. It's a pretty far away target, okay? And this could be a very beautiful trade if everything works according to plan, which, you know, probabilities are certainly on our side. Now, having said all of that, we know stocks are very fragile. They depend on the broad market, depend on sectors. So, you know, you never know. But certainly everything is aligned for this type of a move to be produced if everything stays the same. Now, one more thing I need to do, which I haven't done yet, is that we also need to look at the earning dates for Under Armour, which is February 13. And the reason why we need to do that is because we also want to use an expiration date which is aligned with the earnings report to minimize the problem of time decay, because the expiration date where earnings will take place will benefit from an accelerated increase of premium as time passes towards earning. And I mean, you still lose money on time decay, but much less compared to other expiration dates. Okay, so February, unfortunately, we don't have February. Yeah, we don't have February. We got January, but January is 50 days. And we just said we need at least 58, okay? So it's either you pick 50 or you pick 134, okay? And yeah, so in this case, you know, I will go for 134 to give ourselves time. And to be honest, the reason why I'm open to use 134 as well, it's gonna make the trade more expensive, but because it's a very, very cheap stock, then I don't care to add a little bit more price. Okay, of course, if you look at the 20, for example, it's $143. If you look at the 50 days, it's $96. Okay, so $96 instead of 143. Okay, so you can see that option is more expensive because you got more time, but also you know, it's still very low cost. And there is another reason why I'm doing this is because I need to sell an option at not at, but actually above the target, okay, which the target is 2284. So I'm looking at the 23. There is no 23, so we need to go for 25. And if I sell the 25, the April is paying me 31 cents, where I haven't checked yet, but I'm guessing if I look at the 25 with the prior expiration date, I need to add a few more strikes. Oh, I don't think there are more strikes. No, that's all. So I do have 23.5, and here this is math. It suggests that 53 is the midpoint, but most importantly, if you want to sell that option, notice how no one is going to buy it from you, and therefore you will not be able to do this trade. Okay, so now when looking at the next expiration date, you do have bid and ask prices, and the midpoint is 32. So you are likely going to get that. Okay, so altogether that's why. Okay, if you were to have liquidity on the January and you were to go for that one, you are dealing with 50 days. We need 58. You know, it would not be a terrible problem. In a perfect world, we would have February, but it's not there. Okay, so April, it's going to be the peak. Okay, so what I'm gonna do then is I'm gonna right click to analyze and buy a vertical spread, because we're gonna be constructing, as you saw on the chart, a bull call spread, isn't it? So this is gonna be a bull call spread using April 2020 expiration date. We need to be out of this trade prior to earnings. At the moment of the screenshot, earnings are happening. What was it? I think it was February something, right? Let me see. It was February 13, yes. So February 13, 2020 is the date for the earnings, but remember that date is changing. Okay, so you need to make sure that you keep reviewing that date, because if earnings were to happen tomorrow and the expiration date is happening after, as you can see, but let's say earnings are happening tomorrow and tomorrow can be any day, then you need to be out before tomorrow. Is that making sense? You need to be out prior to earnings, no matter what, even if you didn't reach the target, okay? So you avoid having a massive gap against you if that was going to happen, okay? So yeah, so let's complete this trade, okay? So we're gonna go ahead and sell the 25 call. We have it here, okay? So I'm selling the 25 call. My entry price, okay? So sell the 25 call. My entry price, it's 18. So, you know, if I had 19, which I don't think exists, so I may have to go for the 20. So let's take a look at what happens if I buy the 20 call. So do we have 19? No, we have 17.5, which is below the entry, and then we have 20. So it seems that I'm gonna use 20. And what I'm gonna do is input my prices, both the entry and the target. So the target is above 22.84 and the entry is below 18.33, right? So now, what am I looking at? Okay, well, I'm looking at a delta of around 30, which I just got here. Okay, 29.31. I mean, we can call it 30. A little more would be better. Okay, this automatically will give you a positive gamma at entry. I'm not concerned about that. But I would also like to find a situation where my gamma at target is also positive. And in this case, my problem is that the gamma, it's negative of the target, meaning that, you know, the stocks begin moving your way, begin moving your way, and there's a moment in time where instead of accelerating the speed of profitability, you are still profiting more, but you are decelerating the speed of profitability because gamma is negative, okay? So you have less steeper of an angle of profitability compared to the beginning of the trade, where the angle of profitability is steeper, okay? So I would like to find positive gamma all over the place, everywhere. And one way to do that will be to move my 25 higher, which is 30, but yeah, if I do that, I'm gonna get paid nothing. Let's see how much I get paid for the 30. The 30 would pay me 6, so that's not gonna be worth it, okay? That's not gonna be worth it. So if I was to do that, then the trade would be buy the 20 call, that's it. So I'm just gonna simulate that, buy a single, okay? So this is buy the April 20 call by itself, okay? If I was to do that, okay, notice how I unchecked the spread and I only have the single call checked, okay? So if I was to do that, my delta is 42 and I got positive gamma and positive gamma, okay? So that's nice. Now, of course, I'm being hurt on theta big time. So that's not so nice, but it's what it is, okay? It's trading options, that's how it is, right? But good news, I do have the delta I want and definitely positive gamma all the time, so that's good. But hopefully I can find a way to do my vertical spread to be similar so I can suffer a little less theta. And I know that I cannot do it by moving the 25, because if I move the 25 to the 30, I only get paid 6 cents. So if I cannot move the 25 higher, then I need to move the 20 lower to 17.5. And if I do that, so let's see what happens. I get a delta of 50, okay? I get a delta of 50, but my gamma is still positive at entry, that's good, but it's still negative at target, that's not good, okay? That's not good. And the cost of the trade happens to be 222, where here the cost of the trade, it's only 134. So, you know, all of this, okay, and this, again, this is happening because this is a stock which is not very high price, and therefore I cannot move this to 30 or beyond, because then I get paid nothing. If the stock was to be $200 a share, then I would be able to play with that option, move it further out, and adjust my delta and my gamma more happily with more flexibility. But I cannot do that because it's an $18 stock, okay? So what are we gonna do? Well, we are just gonna buy a call on this trade, buy a single call. You will pay around 133. Actually, you'll pay less. You will pay around $123, okay? When the stock falls to the entry price, which is 18, the value of those calls will be around 123. So then what you would do is that you would purchase those calls. And you would not use stops, because you know that if you buy a call and it costs you 123, even if the stock was to go bankrupt all the way to zero, the most you can lose is 123. So it's kind of like you got a stop built in by buying a call. Okay, and now you're gonna allow, you know, the market to do whatever it has to do. We know stocks are quite fragile. They depend on other stocks, competitors, sectors, the broad markets, even the dollar index. So there are many things, even the treasury market. So there are many things that impacts the markets and therefore stocks. And not using stops allow you to survive trades that if you were to use stops, they may move against you, stop you out, and then start moving your way. So that's one of the beauties of using options. Okay, so this figure is important because that's your risk. So let's say you tell me, Jose, I'm okay risking $250 per trade. So then buy 2 calls. You tell me, Jose, I'm okay risking $125 per trade. Okay, buy 1 call. You tell me, Jose, my maximum risk is $50. So then this trade is not for you because that call cost 123 and there is nothing we can do to reduce the price. Okay, so keep that in mind. This is your risk expectation. Okay, so assuming you are with me on this trade and you are happy with the plan, so what I need to do now is to show you how to execute it. So let me rectify this. This is just a single long call. Okay, using April 2020, buying the 20 call. Okay, so how do we place that order? Very simple. You would just come in here, click trade. Okay, and then you would just customize the parameters below. So I'm gonna go for market price. Okay, I'm gonna make the trade to be day only, meaning that if I don't get filled today, tomorrow I'll have an opportunity to replace that order if I choose to. But maybe the climate has changed and then I will have to cancel it. Okay, so that way I don't have to cancel it. Also, with most trading platform, canceling an options trade, canceling an order. Okay, I'm not talking about closing a position. I'm talking about canceling an order. Often implies a cost from the brokerage side. So one way to avoid paying to cancel an order is to use day orders. So at the end of the day, if you didn't get filled, it gets canceled automatically by the broker, not by you. So you don't have to pay for the order to be out. Okay, that is unique of options and also varies among brokers, but is quite standard in the industry. Okay, so I'm just gonna input the price. So we are looking at Under Armour, and our condition to purchase that call is not the price of the stock to be 1856, is for the price of the stock to be 1833. So if that stock is 1833 or lower, then this order will get activated. That's why it's called an activation rule. And we will be buying to open the 20 call that expires in April. I'm just gonna place order. I'll get a pop-up window asking me to confirm. I'm gonna click yes, 1, 2, 3. And now the order is in the system. Okay. If I look at my manage tab, you can see here on the top, I got the UAA trade waiting to get filled. Notice how I got another trade here, Didi. That one, I got a good till cancel order. So if I want to cancel, I will need to come here and cancel order. Okay. And if I click cancel, the order is gone. You see, you're out. Okay. The Didi order is here. Okay. The order is out. But that implies a cost with the broker. Okay. So keep that in mind. Anyway, we got that. Okay. We got that. So trade number 1 is in the system. How is it going so far? Everybody with me? Everybody with me, guys? Give me a little feedback. Good to see you, Ray. Good to see you, Ronald. Pleasure, guys. Ray and Ronald, you just joined. You just joined, and we are doing options trading today. Okay, so a little bit of a different experience compared to Forex. Not sure how familiar you guys are with options, okay? Listen carefully, it's an amazing asset. Cool. Okay, so good. So I got one only, Z, so I'm just gonna finish the list and then I'll dive into FedEx to see if we can conclude that other trade or not. So with that stock, Z, we have 3 candles out of 5.70, so that is fine. We got an average around 40. Okay, so we need to look for UFOs around 40. Okay, but for me to be able to see that, I first need to wait for the pending data to be loaded. Okay, so what do we have? We got 38%. That's no good. Okay, that stock is very, very weak. I'm gonna move to regular session, and now we got 46, still very weak. So Zillow Group, not a valid candidate as a probability opportunity. Okay, good. So moving now into non-directional trades. Notice how FedEx is still in the list. Okay, actually all the stocks we got in the list earlier are still there. I know that because all the symbols are colored in black. Notice when you have new symbols compared to the prior scan, you can see blue color. But notice how my non-directional trade update. Remember earlier I clicked on the wrong button, isn't it? So notice how all of them showed up in black color, which means they were there already the prior time I did the scan. In other words, I don't have any opportunity, which is new. So the only one I can deal with is FedEx. And let's see if in the end we do have the premium we need or not. Earlier it was not looking too good, but remember what I said. When the market opens, we may see different values for the options, okay? Good. December 13. Analysis. Remember we were looking at December 13, okay? We were looking at a range. Oh, this is not correct. Here we go. Now it's updated. So we are looking at December 13. We are looking at a range between a little below 148 and a little above 160. Okay, so that brings us, it brings us because 148 is here. But remember, we need to have two UFOs. So, we need to be using that 141 and that 166. So the question is, how much premium do we have if we sell the 166? Okay, actually it got worse. It was 6 cents, now it's 5. So yeah, we're not gonna be able to make FedEx work as a trade. So guys, the remaining part of the session then will be to explore the shorting opportunities. So directional short, okay, because non-directional, nothing was meeting our criteria. Okay, so no non-directional today. Directional long, we found a trade with Under Armour, and the trade is in the system, so that one we have it. So now we're gonna be looking into the shorting opportunities to see if those trades qualify, and then we'll plan for them like we did before. So let's begin. So we have Didi. Again, it's only 7, so I'm just gonna go from top to bottom. So Didi, let's look at, well, actually I don't need to look at the earnings yet. So yeah, so that one is no good. We got 15 candles into a climate that should be 541. So that climate has extended way too much. So we're gonna go for the next one, which is eBay. Okay, eBay. So eBay is valid, okay? Valid from a climate point of view. We got 3 candles into the climate. The climate going down should be 5.12. So certainly we are on time to ride and move to the downside from the current price, okay? So we are on time. And the current price, the current average price is around 35. 35 point something, which is right there, okay? So, I mean, we still have pending data, so we don't know what's gonna happen right now. It doesn't look like we have a UFO at this price, but let's see, okay? So first, with with regular session data, we got 55%, so that's a very good stat for a stock. Remember, stocks are fragile, so getting 55 is nice. And if we look at pre and post market, we are getting 48, which is not good enough, okay? So back to regular session, that will be the only way to deal with that stock. What is the bottom part of that UFO? It's 35.46, and that is much higher compared to 35.3, okay? It's like 1% higher, so yeah, it's a shame. If that UFO was just a little lower, right? So if the UFO was somewhere there, that's it. We would be ready to go, but we don't have that, so we are not gonna improvise it. Good. So loading the next one. Okay, Dirk Pansy, are you watching our RF trade? I love it, guys. Okay, I love it. I always talk about teamwork, isn't it? I love it when you guys team up to do your trades. So we got 2 candles, okay, into a climate of 481. That's good. Average price 37.15, okay, which is that UFO. Actually, it's looking like that stock is entering a red UFO around the average, ready to begin falling. So it's looking like Momo may be a valid opportunity, okay, but we need the probabilities in our favor. At this moment, we got 36. What about pre and post market? It's looking weak, actually. 39, not good, not good. Orders are canceled all the time on that stock, so we're gonna pass. Okay, NWL $18, I'm just gonna pass. TWLO, Twilio, what do we have? So we have a climate of 3 candles out of 3 something, okay, which is 4. So it's not too exciting, but certainly rules still allow us to take the trade, expecting this to fall. The average price is 100.29, which is somewhere there. So in that particular time frame, we don't have anything. Sorry, let me rephrase that. Not that time frame, but with that particular set of data, which is regular session hours. Okay, we don't have it, but still pending data. So we're gonna wait. So 50%, that's okay. What about pre and post market? It's 48, it's not good. So we don't have the setup we need. We're just picky people. Okay, that's how we stack probabilities in our favor. Okay, we are picky people. I'm proud to be picky because that's how we trade with high probability. So what are we doing here? Looking at Twitter, 2 candles out of 447, certainly time to enter. 30.22, that's the price we're looking for the UFOs. 22 would be more or less here. So it's looking like we are copy-paste setups with many of those stocks, isn't it? So we don't have a UFO, but again, we got pending data, so we're gonna wait and see what happens. Yeah, still pending data, so we're just gonna wait a little more and we'll have the whole chart loaded. I'm gonna click on WB in the meantime, so Weibo also loads. So Weibo is not good. It's good from the climate point of view, 2 out of 6, but you can see price is clearly above the average, and we don't want that. We want price to be around the average with a UFO. We are ready to be flexible because it's a stock, but in this case, we are from 43.40 to the current price, which is 44.02. We are like 60 cents above. So certainly we clearly crossed the line on the other side of the average, and may represents a change of climate. We'll see that tomorrow. But anyway, so what do we have? Well, when I look at Twitter, I got 53% probabilities with regular session data. If I use pre-post market, 53 becomes 47, so that's not good. So then we would use regular session data, and again we are looking for 30.20, and that UFO right there, oh yes, we don't have it, guys. That UFO is 30.38, which is much higher. I mean, we actually need a UFO at current price, where price is right now 30.16. That UFO is just higher. Okay, so yeah, so no valid setups on those ones. Certainly you can go ahead and just click run and rerun the scan because the market has opened, multiple stocks have moved, so you may have some setup that does line up with what we need. But yeah, for today, what we have got is Under Armour. That one was a nice one, meeting all our rules. And from a non-directional trading point of view, I'm loading at the VIX chart so we can take a look at implied volatility, because we had very little premium built in those options and very few opportunities, which probably represents the fact that the VIX is not high. It's been dropping a little bit by today. That's not a lot of drop, but still it's not the best. We are dealing with 14 VIX. Yeah, I mean, we've seen it lower, right? A few days ago, it was all the way there to 11.5. So actually 14.5 it's significantly higher, but still we haven't seen that great amount of premium in those options, at least for now. Okay, so yeah, we are there. If I look at this in a daily time frame, where are we at? yeah, yeah. I mean, the good news, okay? The good news here is that we got two green UFOs on top of each other, just like that red UFO. Bring it down. 66% probability of this to happen. When it comes here, we have a pretty high probability that the VIX will go back up, and we should be able to find more hefty premiums in those options. Okay, but not today. Yeah, and therefore this is bringing us to the end of today's session with Under Armour as the valid trade and MetaWar rules during the 1 hour time that we spent together. Okay, so is there any Orlando, Jose, I have to go. Yeah, take care, my friend. Take care, Orlando. So yeah, so is there any question that you guys have? We are about to conclude the session, so if there is anything that I haven't covered, or I went too far through something, I certainly welcome you to ask me that question before we conclude the session, so I could clarify it for you. If not, basically we are done with today's session. So this is your time to type if there is anything that you would like to consult, and if everything is good, just type good. So that way I'll know that you guys followed me, and that helps me as well to measure the pace at which I need to be conducting the sessions for you guys. So I help you the best I can. Okay, so just looking at the chat box here. Okay, it seems that everything is good. Yeah, very nice. Okay, everyone, you guys take care. We will see you soon. We'll continue with all those sessions and everything else. So take care. Keep up the good work as always. Keep following those rules. Keep following those processes. Put your trading plans in place. Practice, practice, practice. And I'll see you in the next one. Okay, guys? Take care, everyone. Bye-bye.